Good morning, everybody. 9/11, 2023, 22 years after the 9/11 attacks. And I hope everybody remembers where they were. And if you're too young to remember it, spend a little time here at the history.com website. It's pretty good coverage. I think pretty true to the facts, no conspiracy theories. Hope you understand what changed the world, because the airports that you live in today are not the airports that you lived in the 1990s. All right. Stock trading seems a little bit small once in a while on this day, because I do remember where I was on 9/11. And it's pretty surreal for a couple days. But business is business. It's 22 years later, and we're making a little bit of money on Aemetis today. So what is going on with Aemetis? That's always what everybody asks. And I think there's a couple things going on. First off, it was pointed out to me that there was a huge call buy for Aemetis. Take a look right here. Somebody for about a dime bought all kinds of Aemetis shares expiring on Friday, which is the exciting sort of things that kids do nowadays, is they buy short dated call options. Tons. That's the equivalent of 1.3 million shares. And as we know, there's not a lot of float available for this stock. So let's take a look at that. Over on Fintel, which I like, it's a clunky website, but it's got great data. Aemetis is still rated as one of the stocks most likely to have a short squeeze. So what are the metrics here? There are very few shares available to short. Now, this is from one leading prime brokerage. There's more shares available than this. Probably in the range of 3 or 4 million shares can be shorted via borrowing. But as we know, a lot of the shares, because I've passed this message on to you and others have passed it on, are not available to be shorted. So the availability of shares to short is pretty low. In that 3-4 million range is what it would appear to be. And we know that half the company is owned by insiders and institutions. So it doesn't take much volume to push the share price up if there are buyers. The shorts have been paying over 20% interest. And remember, their interest rate for a little while was up around 100%. I'll show you where that was. The official short interest has shrunk since June quite a bit. And here is when we started buying the stock. Short interest shrunk a lot. Days to cover has been going up. Why would that be? If they've been covering, why do the days to cover still go up? Because there's few shares to be borrowed. There's very few people who are sellers. The volume shows that, because the volumes come down as the shorts have tried to put pressure on here, the last remaining shorts. Because as you see, half the shorts are gone since we got in. About 11% short interest right now, was in the 20s when we started being big buyers. So basically the smart shorts got out, they covered, and the dumb shorts are still in there. And somebody decided to jam it to them. Let's take a look at the puts, right? A few hundred puts out there can't really fight back against 13,000 calls in a stock that has a low float. So if you take a look at what's going on today, here's today, just a 5-day chart. You can see the number over here. I don't know if I can drag that over. Cannot. But each bar, 9,000, 10,000, 12,000, 11,000, 32,000. All these green bars are people buying. Now, somebody got in here and took some profits or tried to short it back down. But the way the action is going today, we'll see. This is a 5-minute chart. If we bump this down to 3 minutes, a little easier to see just what's been going on the last couple of days. Bump it down to a minute. It really took off, giving a little bit back, but looks like it might be pivoting back up. By the end of the program, maybe we'll know. I'll leave that out there and we'll refresh it later. So as I've discussed with you since day one, the ability of the shorts to affect a stock that is low float is strong until buyers come in. And once there are buyers, especially a lack of sellers, right? I hope none of you are hot money, emotional money. Everything is lined up with Aemetis to send it much higher by next summer, incrementally until then. And then at that point, they're in the Russell 2000 again, and they have 2 to 3 million shares bought for the indexes. Now, I have suggested that they do a private placement. We'll see if they do. I continue to have a hard time not seeing this stock with a market cap over $1 billion sometime next year. I'm hoping by the third Friday in January, because that would make me a lot of money, and it would make you a lot of money. So here's the strategy for the next week. If they're able to drive the share price over 750 by Friday, and I think they have a pretty good chance of being able to pull it off just by soaking up all this float. And I haven't even looked at the January calls, see if there's any action there yet. So let's take a look. A little bit of buying. I tell you what, these $20 calls in January or even the 1750s, I mean, I'd be soaking these up because they're almost free. I think, and this is almost all me right here. I think the odds of the share price getting there, getting into the middle to upper 20s, is about as good as a coin flip. So to get, 20, 30, 40, 50 to 1 on your money for a coin flip, wouldn't you just keep doing that coin flip? At $21, you get a 10 bagger. Let's say you get these for 20 cents. It'd be a 5 bagger. If I told you that every time we're going to flip a coin, heads, I win. Tails, you win 5 times. Would you do that bet over and over again? You would. Now, it's not going to be like that every time. I just happen to think it is 50-50 that the price gets there by January. Most times, that big of a share price jump is not 50-50. I just think it is this time. So if you have a few bucks and you want to do 2 things, one, take a shot at a home run with money that won't hurt you if you lose, if you strike out, but it has a residual impact of driving the share price up. And most of you should already own $5, $7.50, or $10 calls for January. So buying some cheapies way out of the money out here, I'd say focus on the 20s, because the all-time high, if we test it, would make you a lot of money. That's in the middle upper 20s. I'm going to double check. I don't even remember, but it's up there. Why is Aemetis getting these types of moves? I think it's becoming apparent to people that they just keep announcing good things. They're not even up to date here. We know that the India refinery a year early increased their capacity. So they've been doing that for several months now. It's been mentioned on a couple of calls. And that means that their next contract for biofuels in India could be, higher. So we're looking at a situation with the India plant, which, because of the discrepancies in currency prices and taxes, for them to bring that money over here, they pay taxes on. And at some point, because they have a lot of tax losses built up, they can bring some of it over here. But they're financing out of cash flow the expansion of that refinery. And it will have been doubled in capacity probably by next year, it looks like. They're that far ahead. They had originally said 2025 or 6. It looks like it's going to happen in 2024. Given the geopolitical situation where getting a deal with Saudi Arabia on oil seems less likely every day, given that Russia and China have pulled them in the bed, right? Why is that? Because Saudi Arabia are the Ferengi. They only care about profits. They have no loyalty. Their only loyalty is to profits. So will the price of oil come down again? Probably, just in a technical fashion. Still looking at 2026 and 2027 for the big dump off in oil prices when panic pumping occurs in the face of rising EV sales. I think I mentioned to you already that I'm selling my Forerunner in the next couple of weeks. Just have to find a minute to clean it up, list it. Looks like I can get between $7,000 and $9,000 for a well cared for 2006 Toyota 4Runner Sport. It's the best one. I bought it used, I think at the 5-year mark. Yeah, it was 5 years old when I bought it. 91,000 miles. Now it's got 220, and I've rebuilt half of that vehicle as we went. De-rusted it, new panels, all kinds of stuff. New frame for the windshield. There's a lot of stuff I put into it. If I kept it, it would probably run for 10 more years. With minimal care, there's some wires that have to be replaced. And I'll tell the people that. I'm not keeping it because it looks like the EV that I wanted, that I expected in 2026, is going to be here next year. So I'm just going to go through a winter without a second vehicle because it's almost never that we used to. Easy to get an Uber around here, plenty of friends around for the 1 or 2 days a week that I go out without Jolene. When you start thinking about that in the context of a more macro picture, right? Your micro situation and what you're seeing in terms of a macro picture, what you realize is that biofuels and carbon capture are the place to be. And one of the reasons I don't think we cut a deal with Saudi Arabia anymore is I just don't think Biden wants to. I don't think he wants to sell his soul to them. He's willing to do the right thing and keep pressure on them in China and Russia, even at the risk of maybe losing an election. He's 80. I don't know that he entirely cares. I'm going to do the right thing. If they vote for me, they vote for me. So when you take a look at the price of oil, you start to ask, how much power does Saudi Arabia and OPEC really have? And the answer is not a whole lot, especially with the Inflation Reduction Act empowering companies like Aemetis and Occidental and Exxon and Chevron and everybody else to make money without having to produce a whole lot more oil. I'm telling them, hey, switch your refineries over to biofuel. Luckily, Aemetis is probably 2 to 3 years ahead of everybody. In California, they're way ahead. Start adding up all that revenue. Take a look at the low share count here. Man, I really just think it's kind of a no-brainer to own this one. I really think this is one of the safest potential multi-baggers that I've ever seen because of the massive government support. Just massive government support. Granted, the government didn't do these things because of Aemetis. They did them because of Exxon and Chevron and a few others. And don't ever think that the U.S. government is not in some sort of cahoots with Exxon and Chevron. They are. And Occidental and Berkshire. And big money talks. All right. So when you want to do some screening for stocks to buy or sell or to trade options on, again, TradingView, I just don't know that you can beat it. Take a look at these screens and you just flip this around, change it to a weekly setting. This is the new one. A lot of stocks over. But here you go. Take a look at the large caps, oscillators. Got some interesting stocks that are oversold on the daily. Where is my setting for weekly? So these are just the VSL stocks. On the weekly, we have a lot of stuff that's overbought again. Monthly, how are we doing? Quite a few. So really, these are all stocks that you can sell covered calls on for sure. What's oversold on the monthly? Look at that, Chevron. Weirdly, they're calling that, it's been a while since I did a chart here, huh? Calling that oversold. And that's kind of crazy, isn't it? Just because it's been chopping along sideways for basically a year. So that makes it seem like it's going to break out, which is why I talked about XLE. Let's go back here. Something doesn't seem right to me. See, that's not oversold. That's not oversold either. So right now the price of oil is correcting a little bit. So this should come down in here, as should XLE. But it's a minor correction, right? A couple bucks, which is why we were buying it back here. Interesting. Take a look at the weekly. Overbought a little bit. Could conceivably sell a covered call here. Take a look at the monthly. For sure could sell a covered call. Yeah. In fact, I'm probably going to reduce my XLE holdings in the 401k because it has rallied pretty good since I bought it. All right, that was more of an aside to talk about energy. Aemetis is in good shape. Where else should we be looking for things? Well, last week I talked about Charter was flirting with changing the way that they deliver content, and they took a step in that direction. It wasn't as sudden as they threatened, so good negotiating on their part, but they are getting more into the same game that Roku is in. Be a reseller of streaming services. So they cut a deal with Disney to be a reseller of Disney Plus and ESPN Plus. And as you know, Disney is about to buy the remaining 1/3 of Hulu that they don't already own from Comcast. So you really have to think through the strike and the mergers and acquisitions and the ability of Comcast and Charter. And I always thought AT&T, although I can't find them doing it really, to be competitors to Roku, to put a Roku-like service right on their wires and in their clouds without needing a device. Because if they can do what Roku does without making you have a Roku device, then why wouldn't you bundle your streaming services with whoever provides your internet. So the package that Charter was talking about would be just to do a basic cable, including local and some ad-based services, a lot like the Roku channel, and then sell you the streamers that you wanted, just like Roku. Had a talk with one of the three people that have pretty good connections to Hollywood and perspective of careers over the weekend, and it was interesting to hear kind of a history of the labor disputes going back to the middle 1970s. When I take a look at Comcast and Disney, because they're content providers, remember Comcast owns Universal, which is NBC, and Peacock, and Warner, I think about, and Paramount, and how these companies are going to come out of this strike. And I think the deal is ultimately going to look like this. The actors are going to pretty much keep their job security. I don't think they're going to get much of a raise. I think they're going to get some version of profit sharing. And it won't be exactly like residuals because the industry is structured differently now. But the most important thing they're going to get, and this is why they'll have job security, is AI is not going to be allowed to supplant them. AI will become the writer's assistant, and AI will not be able to create images that look like, say, a Gal Gadot or, pick your movie star without that person being compensated. And there might even be some other restrictions. So we'll have to see how that shakes out. But when you combine a new contract it's not going to be like the UAW contract that's going to be pretty good. It's basically something to preserve the industry in a way that the talent still makes money and is protected, but also on residuals, it just never comes back to the payouts that there were in the past. And that's really good, right, for Warner and Paramount and Disney and Comcast. So this entire basket I really like. I asked Teresa for a chart on XLC in the chat room a minute ago, and lo and behold, at the speed of a keyboard, Shooter pops up a chart. Looks like there's some pullback potential here. It could rally all the way to 75 first. Remember, time frames get fudged all the time because of macro events. So even if this wiggles a little bit and then jumps up and comes down, we've got two targets here. And it shows basically choppiness, right? Because these are so narrow. That's a choppy sort of thing developing. And like I talked about last Thursday, I think a choppy through end of year is what is developing. It'll let the bears talk their bear book. It'll let the bulls talk their bull book because the trades will probably alternate. So if you're not much of a trader and you want to buy something, you wait for one of the pullbacks. And if you are a trader and you want to do some scalping or profit taking, you wait for the rallies and you let the choppiness play out again through the end of the year because of budget negotiations and because I don't think you'll see a rate cut before the end of the year. But I do think we're going to see rate cuts and QT cuts by next summer. So we should be looking for corrections to buy. Now, what could make a correction turn into a crash? Again, China. Let's keep an eye on China. So all these charts look a little bit alike. It came off of bottoms late last year, and they've had rallies. So now I think we go into a choppy period, unless, again, financial crisis because of China. There won't be a financial crisis because of us. Again, all the talk about debts being a big deal, again, I say wrong. Did you know, you should, because I've mentioned it before, that when the Trump tax cuts expire, even if they keep the larger standard deduction, it slashes the annual deficit something like 2/3. And remember, combine that with the flat budget that they're negotiating right now. By 2026, a lot of things happen that year. Suddenly, the U.S. budget deficit doesn't look that bad. Interest rates are lower. They refinance things at lower rates. And that means that the indexes will be choppy, maybe through the end of the decade. So you have to be a stock picker, or you at least have to do some slow-handed trading of the bigger waves. You don't have to trade any of this little stuff in here if you don't want to. But these bigger moves, using RSI as a shortcut is the easiest way. But I really like what Teresa does, along with what Shooter does. Shooter shows us these nice, visually appealing things. Oh, I don't see a chart from Teresa yet. Maybe she put it in the other chat room. Nope, I don't see it yet. All right, I don't see Teresa's chart on XLC. Are you posting that, Teresa? Okay. Well, if you can post it here, I'll show it. Well, in any case, Aemetis might be going on a big rally here. If on Monday the share price is over 750 and your January 750 puts are back up to $2 again, then you have a decision to make. And I would make it on Monday or very, very late in the day on Friday if you want to take any of that off the table. You know, I can't tell you what your risk tolerance is. I manage other people's money, so I'm a little bit less aggressive with theirs, right, than I am with mine. Actually, kind of a lot of it. Well, I will talk about it later then. So why don't we call it a day? And I like these companies. I think there's a little bit of volatility coming. You want to buy these dips on the streamers, on Comcast, on Disney, on Warner, on Paramount. Netflix is all right. If you're really familiar with it and you want to trade it, I don't think they have tremendous upside. Why? Because they still have a legacy problem of not having a library. Not having a library is a bad legacy problem. You want a library. So that means that either Netflix has to get acquired, which I don't think anybody can afford to do right now, or they have to acquire somebody, which will dilute them financially. Paramount and Warner both look likely to be acquired. Netflix probably isn't the buyer. Apple probably is. YouTube might be. Comcast hasn't had success with Peacock, so if they bought Max/Warner, now they have a lot. They'd have to spin off CNN. There's buyers for that. We know there's buyers for that because they already have NBC. So expect the mergers and acquisitions to continue and probably to speed up by April. I believe in April is when Warner is allowed to be sold. There's a tax reason why they couldn't be until then. All right. Call it a day and keep an eye on things, but expect a lot of choppiness.